Alright, cool. Crystal's on, Foxy. What's up, Luce? Alright, cool. So, I think we just need a few more people wait for him to get started. Oh, okay. Alright, cool. Hi, guys. Well, real quick, who's new to forex? Like, who's never traded, or who doesn't really uh know about like the candlesticks or anything like that? Like, if you know the basics, then you're okay. But who has never traded before in the group? You just comments in the group. Let me know. If you guys can't hear me, let me know, because should be able to hear me. But if you guys can hear me, let me know in the group too, just so while I'm talking, you guys don't miss anything. All right, Georgie, brand new. Okay. Anybody else? It's kind of brand new. No. And I'll briefly go over stuff, try to get you caught up to everyone, because really, I mean, trading is not too hard. The only thing that's hard about it is the psychology of it. But everyone always talks about how trading is so hard. But the way we trade is pretty lazy. So that's why it's called the Forex Secrets. And if you go on our website, it's like the lazy way of trading. So we don't trade like everybody else. All right, cool. So I guess it's just one person. That's kind of new. All right, well, let's go ahead and get started then, and I'll just kind of explain stuff while we go, and then I'll check the chat here and there. But real quick, um, I'm just checking if you guys want to follow along, or if you guys are on your own charts at the house. Then I'm just going to be going over a few pairs, and you guys could throw out pairs that you want me to check out. So these are just random. I'm just looking at just some random pairs, but the most popular pair that everyone likes to trade is the Euro USD right here. So I'll just go over this pair, I guess. All right. So when you're on your MT4, what you want to do is you want to trade the candlesticks. Okay. So that's this right here. These are the candlesticks. I don't ever trade any of these. I mean, I'll go on the line chart here and there just to mark on my chart, make sure everything looks nice, but we'll get into that a little bit later. And yeah, so let me check the chart real quick. All right. Okay, guys, so I'm just going to go over how to set up your charts real quick, and then I'll just go over the candlesticks with you guys. So if you guys are brand new at setting up your charts, this is what you want to do. And this is all going to be recorded, so if you guys miss anything, um, this is going to be recorded so you guys can have it for later. But you want to go into properties, and usually what I do, like I'll have my background black, and the bar up you want it to be green, so it's already green. Bar down you want it to be red. These are just like the general colors. Bull, so bull means it's going up, so you want that to be green. And then bear, these are just the lingo. Bear means it's going down, so you want that to be red. And then just click OK. Cool. See, we don't want any of those lines in the background. We just want it to be plain like this. So you can read the candles a little bit better. All right, so for those of you that have never traded before, the reason why I choose to trade just the candlesticks up here is because the candlesticks actually tell you things. There's different patterns that happen, and they're just easier to read. So the green candlesticks tell us that the market's going up, at this time, and then the red candlesticks tell us that the market has dropped. So each one of these candlesticks indicate 1 hour. You'll see this on the top of your MT4 platform. This is the 1 minute. So on the 1 minute, each one of these candlesticks signify just 1 minute. So this green candlestick was a minute. This green candlestick was a minute. So every single one of these candlesticks equal a minute. And then you have the 5 minute. Each one of these candlesticks is 5 minutes, 15 minute, and so on. I usually never trade below the 30 minute. So I'm going to be teaching you guys how I trade. So since I don't trade anything below the 30 minute, I usually stick on the 1 hour, 4 on the day. That's what I'm going to be teaching you guys. So normally I just stick on the 1 hour. And so each one of these candlesticks are equivalent to 1 hour. Okay. And so that's how you want to trade. You want to trade on the 1 hour, 4 on the day. It's just easier that way. So I'm just explaining some things for the new people, and then we'll start training for everybody else that kind of already knows this stuff. But if you already have, or if you guys already had the video of I guess what I've explained before, then you guys will be caught up. But if you guys have any questions, let me know. Just because I normally don't teach beginners. I'm usually here teaching advanced people how to better their trading, just because everybody likes to have a lot of crap on their charts. But this is just how I trade, just like this. I don't put anything else on. But I'm gonna show you guys just some techniques and what to use, so you guys can pretty much cheat the market. And let's see. All right. Let's see. If you guys have any questions, don't be shy. Just go ahead and type in the group, because this is for you guys. And so I'm going to do my best to explain what I know. But as a beginner, like if you guys don't really understand the market, then I need you guys to let me know, because I can explain how I know how to trade and explain what I do on the charts. But if you're just beginning, I need to know, I guess where you guys are at. So if most of you guys generally know what the candlesticks are, what a pip is, and stuff like that, then just let me know. But the nice thing is, everyone that is on this training, you guys are going to get my training videos that kind of go over all that stuff from beginning, intermediate to advanced. And then not only that, we're just going to work with you guys for a couple months to a few weeks, so to get you guys all on the same level or on the same page. So you guys are going to be our success with this training group, because I think this is going to be my last one I'm going to do. So I'm excited for you guys to be on. All right, so no one's commented yet, so I'm just going to guess that you guys kind of know what's going on. All right, so let's get started with the regular stuff. You guys just need to know what the candlesticks are. Oh, and then you guys need to know what a pip is. So here on the side, you see these numbers on the side. These are micro pips, and I don't pay attention to those, so you don't even need to worry about that. I suck at math, so don't even, you get me started on that, and I'll just daydream or something. But what you need to know, see, there's this crosshair right here. When you click that, to measure out like a candlestick, so I'm going to measure out this red candlestick right here. This is a supply drop. That's what it's called. So when I measure this out, all right, so there's going to be three. You see those the three numbers? There's a 9-267-1.12236. if you guys can see that, what the 1.12236 on the very right hand side, that is equivalent to 26 pips. So if you see in the middle section where it says 267, since these are micro pips, you never count the last number in the middle, and the middle section is what we're looking at. We're looking at that middle section just to I guess calculate our pips. So this one red candlestick right here is about, so it's about 26 pips. We don't count the 7. Okay, so since those are micro pips, you can write this down. You never count the last number. Okay, so it's just 26 pips. So if you're trading a regular full lot, I mean that's where you want to get to. $260 just in 1 hour. You see that? Just this long candlestick right here. So just in 1 hour, if you're trading a regular full lot, that's $260. So that's not bad for an hour. Anyway, that's generally what a pip is. So let's see. All right, no more questions. All right, I guess we're just gonna go ahead and cruise through this since no one has any questions. But can you guys all hear me? If you guys could type in the group, just let me know if you guys can hear me, so I'm not talking to Casper. If you guys are on Facebook. Okay, cool. All right, just making sure. So, all right, give me 1 second. All right, I'm gonna guess that everyone can hear me then, since George is coming around. Okay, cool, cool. All right, thanks, guys. All right, so since we were just going over pips, I guess I'll just write it out here for you guys. Since this is all going to be recorded, you guys can just use this, especially George, since you're new. This is also on the video, so I'm just going to briefly go over it. But so a micro pip, or just like a mini pip, when you first start off, it's equivalent to 10 cents. So you'll see this on here. So right here, you see this? This is a full lot. I'm gonna access quickly. So this is a full lot right here. This is this 1.00. That's equivalent to $10 that you're trading. So if we were just trading this one candlestick, this red candlestick right here, you would have made $260 just off of a full lot. Okay, this is what it's called, full lot. So I'll just type up what those are equivalent to, so you guys can just get the gist of it, and kind of know just how those are traded. So when you're just beginning, you want to start off with a mini lot. So it's a 0.01, and then when you start getting a little bit better, you want to start trading with a micro lot, and then you want to trade with a full lot. Oh shoot! Hold on. Let me do that over again. I don't know why I didn't put it. I should put it right here. Okay, so this is a mini lot. Mini lot, it goes from anywhere from 0.01. So 0.101, that's equal to 10 cents. If you go 0.02, that's 20 cents. 0.03, that's 30 cents, and so on. It goes all the way up to 90 cents. And then once you go past 90 cents, if you put 0.10, that's $1. 0.20 is $2, and so on. And then with 1.00, there's the full lot. Um, the full lot are 1.00, that's $10. 2.00 is $20. 3.00 is $30, and so on. Okay, it goes all the way to 9, and you can keep going. So if you were to put like a 10, so 10.00, that'd be $100. So that's just how it works. But you want to stick in this range. I actually just sticking right here. So the full lot, this is where you're gonna make that life-changing money. You can still make life-changing money with the mini lot right here, just putting like a 0.20, 0.30, stuff like that, for like $3. I mean, just off of just the cents right here, I mean, you can make a good $100 here and there, like if you just trade the micro lots. And so that's just how that works. And if you have any questions on that, just let me know. That's also going to be in that training video. Some of you guys already have that already. If you guys have questions about that, just let me know. But like I said, I was just going to briefly go over that, so we can go over some trading. But that's just how that works. So let me check the comments real quick to see if you guys have any questions. Okay. And you guys can write your questions in the comments before I check those. If you guys do have any questions, okay? But all right. Now I'm gonna go into. So that's pretty much what you need to know. If you're not familiar already with like the MC4 platform, right here, these are just your trend lines, and so this is all I really use right here. I'm gonna teach you guys how to use the Fibonacci. This is what I wanted to teach everybody in my training video, but it just went on too long. So I'm gonna teach you guys how I do this because I don't trade the Fibonacci like everybody else. Since I told you guys I'm not good with numbers, but I'm pretty good at finding the cheat codes just because that's how I do it. Just like I play video games, I just use cheat codes. All right, so let's get into it, guys. What you guys need to know, I guess the crucial thing that you guys need to know about trading is how to use support and resistance. Okay, so whenever you're looking at the market, you want to start off with the day. Okay, so you go on the day time frame. And when you look at the day time frame, you want to look for the trend lines. Okay, you want to see where the trend's going. That's the first thing you want to do. So right now, if you guys are looking at this market, if you guys are trying to find a trend, it's actually in consolidation right now. So consolidation just means that the market moves sideways. Okay, so like right here, just moving sideways, and you need to know, I guess, that word consolidation is because whenever somebody says that it's in consolidation, that means that there's going to be a breakout pretty soon. And so when the market only moves up, down, and sideways, that's it. And all like how we make our money, we just push buy or sell, and that's how we make our money. But when the market's moving sideways, we don't trade it just because you're not in position to make any money. So This is consolidation. This is considered consolidation when it moves sideways. Okay. So I'll just highlight a few consolidation areas so you guys can see what I'm talking about. There's kind of consolidation right there. All right, so these are just the consolidation areas that you can see right here. All right, and we don't trade those, okay? But we can. So you don't trade those, but we do trade those. And what I mean by that is, whenever you're trading consolidation, you want to put an order. So I talked about this in the video, and those of you that don't have the video, just kind of show you briefly what I go over. So whenever you trade, you don't just go in and push buy or sell. Okay, you're gonna lose your money that way. The way I trade, I always put it in order. So what I'll do, I'll get my crosshair thing over here, and I want to sell the breakout of consolidation. Okay, so what I'm looking for, when I sell the breakout of the consolidation, I want to sell, or I want to put my order at least 20 to 40 pips above this blue one. So just right here, like the breakout of this consolidation. So here, and I go to the edge of the blue line, and I go up at least 20 pips. So that's where we're at. We're about 20, 40 pips up. So remember, it says 303 in the middle. Okay. So really, what that means is 30 pips because we ignore the 3. We ignore the last number on the end. So that's 30 pips right there. And whenever you're trading consolidation, you want to at least be up in between 20 to 40 pips. So 30 pips, that's okay, right there. And then we do the same thing below. Some people call it scalping, just because you're going to be trading both either a buy or sell, whatever the market goes. So that's 30 pips right there. All right. So let's just say the market, see how it's just kind of just doing its own thing inside of this consolidation, just going sideways. If it goes down, if it breaks down 30 pips and it hits this line right here and continues to go down, I'm going to be in the money, okay? And I'm going to make money. If it goes up, or if it breaks to the upside, at least 30 pips, I'm going to be in the money, okay? So if it goes up, I'm going to be in the money. And whichever way it breaks, like if it breaks up, 30 pips, it keeps going. Or if it breaks down 30 pips keeps going, you want to delete the order that it didn't hit, okay? And so this is just how I put in the order, so you guys know. Get the crosshair thing. This is the only time you're going to use these numbers on the side right here, okay? Whenever you're doing an order, you go up to 30 pips, and you see the number on the side right here. I don't know if you guys can see that good, so I'm just going to use this crosshair thing. All right, so the number that we're going to use is 1.13524. You guys see that? 1.13524. So what I'll do is I'll go over here and I'll do a pending order. Okay, that's always what you want to do. And for you guys just starting, you don't want to do one full lot. Remember, that's equal to $10, and that could either go up really fast or go down pretty fast. I mean, in a day, you could easily make over 100 pips a day. So if you're trading a full lot, that's $1,000. And you don't want to risk that much money. So when you're first starting out, I'd probably just do like $1. So I'll do 0.10. You don't need to worry about any of these unless you want a stop loss, and I'll go over that a little bit later if you guys want me to go over that. But I normally don't trade with one anymore. But I'll go over it a little bit later because I used to. So I just have to remember where you guys are at. All right. So what you want to do, so let's say the market's going up. Okay, that's where I was thinking it was going to go up. So you want to put in a buy stop. A buy stop doesn't mean it's going to go up and stop. What it means is you're putting a pending order right here. And so once it hits that buy stop, it's going to continue on going and you're going to be in the money. So, shoot, I forgot that number. Let's see. All right, so 1.13441. Okay, so that number that I just put in there, that's where I put that red line, about 30 pips up. Okay, right here. So 1.1, 1.13441. This is a little off. I don't know if you guys see the numbers there, but that's okay. I'm just kind of generally going over it with you guys. So if the market were to go up and hit that, I'll just place this so you guys can see what happens. See that green line? Okay, so I was a little off, but it's all right. I'll just delete this. So now this is a pending order. So which means it's not in play yet, but once the market breaks up and hits that, then it's going to be in play. Okay, and then I'll do the same thing down here. About 30 pips. It generally doesn't matter, 20 to 40 pips, just depending on how aggressive you want to be. But like the closer it is, like if I were to do 20 pips, if it hits that 20 pips, it's going to hit the 20 pips sooner than it's going to hit the 30 pips. So you'll be in the money a little bit faster. But I like to just push it out to 30 to 40 pips, just because if it does hit the 40 pip mark, then it's almost guaranteed to keep going the way that or like it's guaranteed to go either up or down 40 pips once it breaks out consolidation. If it does go 20 to 40 pips out. So so right here, if I were to do the same thing going down, 1.10577, I just go to the new order instead, and I want to do a pending order. Okay, just make sure that you're only trading a dollar. Instead of a buy limit, you want to do a sell stop, or instead of a buy stop, you want to do a sell stop, and then you want to put in that number 1.12. See, I'm telling you guys, I'm bad for numbers, so and memorizing crap. So I'll get on. All right, 1.1. Let's see, 0531. Okay, and then all you do is just press order. Boom. See that? So now if it breaks up or down, you're going to be in the money. Okay, and this is just how you trade a consolidation. Just these breakouts, right? You want to do that for all these, just when you see the market going sideways. Okay. All right, so I'm going to take these out. Okay. Should I just delete those? But anyway, so these are consolidation, right? And I'm going to teach you guys. Well, I was trying to teach you guys is support and resistance, because that's what you guys need to learn first. All right, 1 second. I'm just trying to figure out. Oh, there it is. Okay, cool. All right, support and resistance. So this is the most important thing you can learn in trading forex, is learning the support and resistance. Okay, so whenever you're trying to find your support and resistance areas, you want to look for candlesticks. So either whether it be consolidation is probably the easiest way to spot support or resistance, just because the candlesticks, they bunch up like this. You see that? They bunch up all over the place. You want to find at least 3 or more candlesticks that touch the line. Okay, so see these bunch of candlesticks right here? The market is respecting that area. You see that? And they broke up a little bit right here, but generally it's respecting that area. And this is called resistance. Okay, it's resisting to go up. All right, does that make sense? Let me check the comments real quick. See if anybody wants me to. Oh, okay. So Joe, yeah. So that pending order that I put in there, it stays in there for. I mean, you can pick how long you want it to stay in there for. So if you want it to stay in there for a couple days, you can actually pick. So let me show you. So whenever you're doing the pending order, right here, you can pick how long you want it to stay in for. If you don't pick a date, or if you don't pick how long you want those pending orders to stay in for, it will just stay in there until it hits your order. So it'll stay in there forever until it hits your order. So it's like either way. I mean, you can leave it in there for a couple weeks. It's going to hit your orders no matter what, just because you're pretty much locking. You're locking in that consolidation. So it's called scalping. You're putting a buy and a sell order in. So whichever way it breaks out, it's going to hit one of your orders. And so whatever order it hits, you want to delete the opposite order or take out the opposite order that it didn't hit. So yes, and you can choose how long you want to be in for. So I mean, if it doesn't hit your order within a couple days, you can just choose a date or how long you want your order to be in. And if it doesn't hit it by that date, then it'll just delete itself. So that's what you can do right here. So whenever you put in or put in your order, you can choose, how long you want to stay in. I usually don't choose how long I want it to stay in because when you're trading the consolidation, it's going to break out either way, and sometimes it can take long, but it's going to hit one of your orders no matter what, and you're going to be in profit. So that's only if you want to put in a day you want it to expire. So that's how you do that. Check comments again. Hopefully that answered your question. But just let me know. Okay, cool. All right, cool. All right, so back with the support and resistance. All right, so this is our resistance level. Okay, you want to start from. I mean, it doesn't really matter. You can start from top to bottom or bottom to top, but I like to start from the top. So putting my resistance levels in first. At times, resistance can become support, and I'll show you that a little bit later. But this is going to be our up, and it's resisting this level pretty much. Okay, and the easiest way to find your resistance level or just support and resistance is finding these consolidation areas. Okay, and you want to mark up your chart with these support and resistance levels because it shows where the market is respecting these zones. Okay, so these are called zones, different trading zones. All right, and remember, you want to look for at least 3 or more candlesticks that touch this line. Okay, so right here. Right here. And I'm not going to worry about that right there. All right, so each one of these in the middle, these are all zones. Okay, you can trade all these. There's every single one of these open gaps or whatever. They're just called zones. Okay. All right, so now that we have our support and resistance, so the reason it's called support and resistance, so the market, so let's just say right here, this is recent, this is live right here where the market's at. It's hitting support level right here, so it's just bouncing off of each other. So this is also called consolidation because it's just moving sideways, but you can see where it's just bouncing off of that support and resistance right here. So how you trade that? Well, since this is just consolidation, you trade it how I just showed you. But let's move back a little bit to, let's just move to like right here, okay? So whenever you're trading this, usually what you'll do is so this is also consolidation too, so let's just go like let's go like right here, okay? What you do is once the market breaks, so let's say the market went down, so it went into one of our other zones right here. You see how it's kind of respecting the support area. What will you do once it starts to show that it's respecting a certain area? You want to put in an order to buy it. Okay, you want to buy the market. So whenever you buy the market, once it goes up to one of the zones you want to take out, so I know that looks like a little move, but that's a lot of money. So if you were to trade this up to this zone right here, that's 96 pips. So if you're trading a full lot, like right here, if you're trading 1.00, that's 960 bucks in your pocket just for a couple candlesticks. And you want to take out at these lines. Okay, so these lines tell you where to take out. That's why you draw your support and resistance lines. And so you're not too greedy when you're trading the market. So whenever you're trading the market, you want to have different levels to take out, because if you're just going in to gamble, then you can make money, but then you'll lose your money. You know what I mean? And so when you're drawing these support and resistance levels, it tells you when to take out. Okay, when the market is about to either reverse, or if it does break out, you'll at least have a set rule for yourself to take out. Okay, so when you're trading these areas, all right, let's say it's going up, you take out right here, and it breaks. Okay, once the market breaks, either your support or resistance, it's just it's telling you that it's going to continue to go up or continue to go down. Okay, if it breaks. If it wicks like this, you see how it kind of broke right here, but then there's a count. So the candlestick, it wicked. And what it means when it wicks, it makes these long, oh, that was a good one right here. See this red candlestick? So it went down. What happened is it went down and shot back up. Okay, so we're looking at the body of the candlesticks. Okay, the body of the candlesticks tell us how strong the move is, and usually like where it's going. And so if you see this candlestick right here, this candlestick, it started to, well, this candlestick originally went down and came back up and it turned green. Okay, so we're looking at the body of the candlestick. You see how it's respecting this support area right here. I want to go back to this. Okay, so these right here, this is what I was looking at. The wicks tell you where the market really wants to go. So hold on, change this real quick. It's not letting me scroll my chart. Okay, so right here, you see how these looks like a little rocket ship. How I look at it is like it's blasting off. See these wicks, how they wick off like that, and how it's small. These are just small candlesticks. Whenever you see small candlesticks do this, like see these small little candlesticks right here. When you see small little candlesticks form and you see the wicks either on the top or the bottom, it's telling you that there's going to be a big move or the market's about to move. Okay, in a big way, either up or down. And so right here, since the majority of these were red, it's a pretty good educated guess that it's going to go down. But having these support and resistance areas, like see this red candlestick, it broke support and it closed down here. Okay, meaning that it was going to continue down for a little bit. So whenever it breaks either a support or resistance zone or area with these lines, it's going to continue to go that way for a little bit. And so right here, even though it broke this support area right here, these little candlesticks just showed me that it's going to blast off because it started wicking down. See this green candlestick? It didn't want to go down anymore, so it wicked. Kind of like rockets. This is just like a little cheat to remember, okay? So whenever you guys see this, whether it be like on the top or the bottom, see like right here, see that big huge, it's like it wants to blast off, but it's going down. So these wicks kind of give you like a cheat, like it's like a cheat code. So whenever you see that, you see the majority of the bottom is, even though this is a green candlestick signaling that it's going to go up, if it wicks down and it looks like a rocket ship pointing down, you want to put in an order to trade that. Okay, so you put in your order right here below the support level, because if it does break that support level, then you're guaranteed for it to drop for a little bit. So let's say that you put it in at least 20 pips below that support level. So I'll just be like right here. All right, you still would have made, yeah, so that's about 91 pips right there. So if you're just trading $1, it's 91 bucks. If you're trading a full lot, that's $910. Just that little move right there, okay? And so that's just a cheat. Just knowing the big wicks, okay? Some people call them shadows, but wherever you see those wicks going, like if it's pointing up, just think of this candlestick um, as a ship or something, or a rocket ship, and this is like the fire coming out, so it's going down, okay? So these kind of throw you off, but there's paths for this. If you go into my other video, you'll see how to trade these. But all right, so this is how you do support and resistance. Okay, so on the daily, this is what I'll do. I'll mark out my chart with support and resistance levels, and then I'll go to the 4-hour. On the 4-hour, you can kind of see it's a little bit easier to see like the big moves in between. Oh, shoot. Go out a little bit. So like these big moves in between. So I'm just trying to go to where the market is currently at right now. Okay, cool. Oh, shoot. It went out. All right. Okay, so this is consolidation, like I was talking about earlier. This whole thing right here, this is pretty much consolidation. If you're looking at the day, but now we're in the 4-hour, and it kind of clarifies things a little bit more. You see this right here, even though this is support and resistance, using these trend lines is also cheap. So I mean, if you're looking at all these candlesticks, you kind of see that these all line up together, kind of like that. So when at least 3 or more of these candlesticks all touch the line like that, I mean, that's a trend line. So this is obviously going down. It's making lower highs and lower lows. So what a lower high and lower low is. Also, this is on the video if you guys study this, is the market will come up, right, go down, and it'll come up. And what this is a lower high. So this high is lower than this high right here. You guys see that? And then it'll make a lower low. So this low is lower than this low. You guys see that? This low is lower than this low, right? And then this low is lower than this low. This high is lower than this high. So once you start seeing lower highs and lower lows, that means you have a trend going on. So this is a downtrend. Also, I call these valleys. You see, it's kind of like a V, upside down V. I call these valleys right here. So at least 2 or more valleys are making lower highs and lower lows. And you could draw like a trend line like this. Then that's an automatic downtrend. I'll try to find another one for you guys. For like uptrend. See these 2 valleys right here? So that would be an uptrend. This one kind of counts. This is a little valley right here, but I'm going to be looking at that. So this would be an uptrend. You see how the market's respecting that line right there? Boom. And whenever you're trading, if you're going to trade when the market's already going up, you might lose your money because of the market always pulls back. So you always want to wait for the pullbacks. Like if you miss a trade, just wait till it pulls back a little bit, or at least hit your trend line right here, because this is an uptrend right now. You see that just from this area? It's respecting that line, going up, pulled back a little bit, kept going up. Didn't quite hit the line, but it did pull back. I mean, if you're an experienced trader, you could trade that, but it came up, pulled back, hit the line. I'd put an order in, probably up here, because let's say that if it were to break, then it would be a downtrend, because if it does break this, it's kind of like your support. This is like a support line right here, and so it's just supporting the market bouncing off, and you trade it. So every time it comes and hits this line, you buy the market. Okay, So that's how you trade that. And if it does break down, like below right here, I put in like a sell order, probably 20 pips below, like right here. I don't know if you guys can see that. So I put in like a sell order, like right there. So if the market did break, which it did right here, it hit my sell order. But even though it broke my trend line going up, once it breaks that that, I know that's going to continue down. So it went down, came up a little bit. I'd probably be negative for I don't know, a couple hours, but then it would shoot down. And so then after you find your downtrend, see these little valleys right here. I'm gonna erase those so I don't confuse you guys. So see these two little valleys right here? It made it lower high, lower low, lower high. You see that? Boom, downtrend. Okay, so it's respecting that. Once it breaks that, then you're on an uptrend. Okay, so when you start figuring out little things like that, you can trade up and down, because that's all the market does is go up, down, and sideways. And yeah, so this is just a little technique. This is what support and resistance. Okay, just showing you guys how to use those a little bit more. And remember, we're gonna be helping you guys throughout all this. So this is just generally to help you guys out. So let's see. Oh shoot, Fatu, is everything good now, or is it choppy for all you guys, or can you guys hear me pretty good, or is like the quality still pretty good? Okay, cool. Fatu, is it still being kind of choppy on your end? Um, is it good for everybody else? Everybody else good? Okay, cool. All right, just let me know. I'll try to check the comments a little bit more. So, but all right, and let me know if you guys want me to go over some more. So after I'm done showing you guys all this, um, well, just show me what pairs you guys want me to look at, and I'll go over those. Okay. So this is the 4 hour, and usually I stick around the 4 and 1 hour. Okay. So this is usually what I'm around all the time, just the 4 and 1 hour. That's not so much. All right. All right. So when I'm on the 1 hour, since there's big gaps in between these, you guys can also, even though these are support and resistance lines, on the daily, you guys can mark up your 1 hour as well, just to um, clarify things on the 1 hour, because you guys can see things a little bit better on the 1 hour. So when I'm on the 1 hour, I'll do this sometimes. So I'm just doing what I do so you guys can see. And while we help train you guys over the next month or so, you guys are going to learn this stuff, and it's going to be easy for you guys. I know there's a lot of lingo that goes with this, but you guys will catch on. And like if you guys know any other traders that trade, I mean it's good to always hop on to see how other traders do things, because a lot of traders, they don't trade the same. So there's a lot of different traders. They have their like different techniques and stuff that they do. But it's also good to see how other traders do things, just so you can get a gist of like what works for you. So, well, I'm telling you guys, like this is probably the easiest way to do stuff. So I'm just showing you guys just like the general stuff, and then I'll go over some really easy ways of trading. Okay. That's everything is easy. I mean, you got to put a little bit of work into it, but mostly all you're really trying to figure out is where the market's going, where it's going up or down, and then all you do is push sell or buy. That's it. You make money. Okay. But remember, we're not gambling, so once we have like a really good technical analysis and a good strategy that works, and you're disciplined with how you take out your money, usually I'll trade at least 20 to 50 pips a day, just so I don't get too greedy, because I have a problem with just sitting in the market and trying to milk the market as much as I can. But I mean, you can lose money that way, so it's better just to do at least 20 to 50 pips a day. I mean, if you do 30 pips a day, and just trade just a full lot, I mean that's $300. 30 pips, 30 pips a day is pretty easy. Um, and if you were to trade just 30 pips a day, just mark up your chart like this, and let me show you guys how easy it is to get 30 pips. So let's see, let's move right here. Let's go to 4 hour. So bigger time frames, you get more money, just a little bit longer. All right. So let's say that we're trading this right here. Market was hitting our support. Broke up a little bit. So this would be 20 pips right here. So that's $200. But yeah, a little bit above that would be 30 pips. And so if you were to trade that just a little bit, not even halfway up, you would have made $300 off that. And $300 a day is 100K a year. So I mean, if you're okay with making 300 bucks a day, 100 grand a year, then yeah, you'll be okay. But if not, then shoot, start gambling, I guess. But anyway, all right. So sorry, I got off track a little bit. So we went over support resistance consolidation a little bit, and also how to find the trend a little bit. So let me go over that a little bit more. So if you're just looking at a blank chart right here, like I said, to find the trend, all you're looking for is the values. So values, they can pretty much see where the market's going, but this is consolidation right here, so it kind of sucks. But this is making lower highs and lower lows right here. Whenever you see that, it's a downtrend. So that would be downtrend. See these two values right there? Downtrend. So let's try to look for something that's not in consolidation right here. All right. Well, we kind of went over that already. So let's do this right here. All right. You see these lower? So this is a lower high, lower low, lower high, lower low. Because this low is lower than that low. This lower high is lower than this one. You see that? But these make values. So you see these two values right here? Valley, boom, downtrend. Okay. And so whenever you're trading this, and you see these downtrends right here, if it breaks up, so if it breaks past this downtrend line, then you know that there's going to be uptrend right after. Okay. So when you trade those, you just want to have an order in. Just connect this, so that's the $3. You want to have an order in at least 20 to 40 pips above this red line. So all you do is get your crosshair if you want to check, see how many pips is above that. So this is like, yeah, 20 pips right here. So you put your order in for this level right there, okay? And then once the market comes up and hits that, boom, you'll be in profit. So that's how that works. So that's just how to find a trend line, okay? Again, I'm just kind of going over these things kind of fast because they're in the videos, and you guys could just replay, play and replay, or fast forward, or rewind, or whatever. And also, this is going to be recorded for you guys, so you guys could go back and check these. Do you guys understand higher highs and higher lows? We tried to briefly go over that while we were doing everything, just to put it in there. But you guys need to know that, okay? The higher highs, higher lows, and lower highs and lower lows. So higher high, I don't think I really went over higher highs, higher lows. So let's say that we're trading this right here, okay? So the market came up, made a higher high. This is a higher low because this low is higher than this low, okay? That's what a higher high is. So let me see if there's like anything fun. Okay, guess not. Boom. All right, so that's going up. So it's higher than that low right there. Came up. This high is higher than this high, so that would be a higher high, higher low, because this is higher than that low. Does that make sense? So whenever the market's doing that, making higher highs, it's an uptrend. And you also see these two valleys right here. So whenever you see those, boom, you can even include this one too. I don't know if it'll touch, but boom. You see that? So they're making higher highs and higher lows. All right, right there. And right here, you see this. So using this trend line, so this is just resistance right here. I'm going to zoom in a little bit so I can show you guys this. All right, you see right here how the top or the body of this candlestick, you want to put this, you want to put your resistance line, you want to put like kind of in the middle of the body, or I mean kind of in the middle of the wick, but also close to the body of the candlestick, because so the thick part is the body, and then this long part the wick. If you put your trend line right there for resistance, and the market goes down, because the market's always going to take a breather. So it went down, hit our support line right here, came back up. You see that? It made a lower high. You see that? So now we know the market's going to reverse. Does that make sense? Do you see that? See how I made a lower high? So now, since it made a lower high, also that little rocket ship thing that I was telling you guys about, this green one just tried to fake out, but also respected that line right there. That's how we know we have a lower high. Once we have a lower high, we know we have two valleys right here. This becomes a downtrend. See that? So I know there's a lot to you guys that are just starting. This might be kind of confusing, but the more we go into it, the more I can answer your questions. I mean, the easier it'll be. But yeah, so I'm gonna show you guys how to mark up your charts, just to kind of cheat in a way to know when the market's gonna go up or down, just so you don't have to do all this crap. The trades, it's called naked trading. So you guys don't have to depend on anybody else's their indicators or auto traders and stuff like that. You guys can just trade on your own. But anyway, so this made a lower high, since it's lower than this high right here, and you know that you have a downtrend, so you could just trade that. Could have went down, or you could have sold that. Market went down, came back up. And you can mark these along the way. So let's just say this one were to form, and you just check to see where it bounces off. And so since it made a lower high, you know that's going to continue to go down. Okay. So yeah, that's just how you trade those. And on big moves like this, so since it went down pretty fast, once you see it make little valleys right here, then you guys can just move those levels down. You can just move that level down to like right here. Boom, you see that? So it made a little valley, came down, and this would be the second valley right there. So all you do is get the trend line, boom, So that the market starts respecting that line. You see that? So once it hits that line and you know it's a downtrend, you want to put your orders in. So right when it hits that line, you want to put your order in to sell the market, or I guess if you want to just play around, if you don't get the order thing down, because you want to learn how to put orders in. Okay, that's just what I've learned. The more you set orders, um, the easier it is to make money. I haven't lost a trade for a long time just putting my orders. So once you put in your orders, you learn how to do that, and you're gonna be pretty golden to always profit off of the bounces. So this would be a bounce. It bounced off of our resistance. Boom, pulled back, bounced off our resistance. And this is a lot of money too. So if you were to just see if you were to catch this bounce down to here before it pulled back up, that's 45 pips. So if you're trading a full lot, that's $450. And that's just the 4 hours too. So each one of these candlesticks 4 hours. So 4 hours, or I guess it would be probably like 8 hours. You would have made that $450. But that's better than going to work, And then came back, boom, you trade that again, all the way up until you start seeing the rocket ships. So that's 51 pips. So that'd be $510 right there. Unless you want to be more aggressive and just go all the way down like that. That'd be 60. So 60 pips, that's $600. And again, the reason why I'm leaving on this is because this is where you guys want to get to. You guys want to get to one full lot, okay? So once you guys can get to one full lot, or get good enough to start trading one full lot, you're gonna have that life-changing money. So, and like I said, you guys can make life-changing money just off the mini lot with just the 0.10. Those are just $1, $1, $2, $3. You guys can make a lot of money off that as well. So, all right. Let me check the comments real quick. See where you're at. Any questions? Okay, cool. Moving forward. And I know you guys got stuff to do, so let me know. We'll probably go for another half an hour to an hour. So we'll try to end like at 7:30 because I know everybody has stuff to do. But I need to teach you guys this as well. It's called Fibonacci. So Fibonacci is just if you look that up, it's just this guy that figured out this algorithm of numbers. It's like shit. Trying to figure out how to explain it. Fibonacci. So this is a Fibonacci right here, okay? And how you use it is you go from a low to the highest point of, I guess, the recent where the market is. So you'll see numbers on the side. Fibonacci, what he did is he made an algorithm where no matter what, the charts are always going to come around these numbers. Okay, so these are just the normal numbers. So whether the market is like all the way, so let's say the market is all the way down here, the market has to come back up to these 4 numbers. So you got 61.8, 50.0, 38.2, 32.6. Okay, but I don't trade the Fibonacci like everybody else. Those of you that do know how to trade the Fibonacci, I'm going to show you guys a little secret. Because nobody else trades like this, so I'm going to show you a little cheat with how to use this. So let's go to our daily real quick. So the only time you want to trade the Fibonacci is when there's a trend already going. So if you guys want to mark that up in your notes. The only time you want to use Fibonacci is when there's a trend. There's already a trend going. Okay. So let me see. The trend. Good one. Alright, so I guess this will work right here. Alright, so with the Fibonacci, you want to check to see, let's say, so the market is trending right now, and you want to see if the market's going to continue to trend, okay, a certain way. What you'll do is you go from one of the lowest points to the recent high. So look right here. And you want to get so you want to start off from the bottom of the wick to, let's say that none of this happened. Okay, none of this happened yet. And so if you go to the top where it made that, right before it starts to pull back, you want to go to the recent low all the way to the recent high. Okay. Now, what I'm looking for is I'm only paying attention to, let's see if this was in. I'm only paying attention to the 61.8 and the 50.0. Okay, that's it. I'm not paying attention to anything else. Okay, so what I'm looking for is the market. So let's say that this is an uptrend. Okay, and I want to see if the market is going to continue to go up. What I'm going to look for is the market to close. See the body. I want to see the market, the body of the candlestick close below the 61.8. Okay, so this is on the pullback. So right when it pulled back, oh, hold on, give me a second, guys. Okay. All right, 1 second, guys. I'll be right back. I'm going to do webinar.
Well, hello. Yeah, our house is a mess.
All right, sorry about that, guys. Just had some people come over. All right. So what I'm looking for, my bad, guys. So what I'm looking at is just these two numbers. I'm looking at the 61.8 and the 50.0, and what I'm looking for is a pullback. So if the market pulls back and the body of the candle pulls back and closes below the 61.8, then I know that the market is going to go down. But if it bounces off, it's going to continue to go up. Does that make sense? So, excuse me. All right, so that's just a little cheat. So let me do this again for you guys, so you can kind of see. All right, so from this right here, okay. So recent low to recent high, okay. And you see the 61.8 and the 50.0. I'm looking for the market to close below those two, but it didn't. It went down, like it shot down, but it wicked it and it closed above the 50.0 and above the 61.8. So I know it's going to continue to go up. Does that make sense? So that's a cheat to know if the market's going to continue up. And so if I were to do this again, so how you trade this is you keep going. So that was the recent low. So now I'm going to go to the other recent low, which is this one right here, that low, and then the recent high, which is right here. Okay. You see that the market came down, hit 38.2. It didn't go below the 50.0 or the 61.8, so it's going to continue to go up. And then you continue to do the same thing. You go to the next recent high, right, and then next recent low, like that. Market came down. Ooh, it hit the 61.8, but it didn't close below it, so it continued to go up. You see that? So that's just a little cheat right there. And you can continue to do that. Okay. All right. So you see how it pulled back right here? We're not looking at this yet. Okay, we're not looking at that yet. But it pulled back, boom, hit the 61.8, continued up. So then move this again, step right here, and see this recent high. Alright, You see how it pulled back? Boom, it closed below the 61.8. You see that? So now, once it bounces off of that, we know that the market's going to go down. Okay? Does that make sense to you guys? Because it closed below the 61.8 now. So now we just do the opposite thing. Okay? So instead of starting from the bottom, like I was doing, so instead of starting from the recent low to the recent high, like that, we want to start from the recent high to the recent low. Okay? So what I'll do, alright. So we know that the market is going to go down now. So we're waiting for the pullback to start the downtrend. Okay. So now the market jumped up, went up a lot. We know it's going to start going down. Once it does go down, because it broke the 61.8 and the 50.0. So you want to start from the top, the recent top, and you go to the bottom. Okay. To the recent bottom. So now, when the market, if it breaks above the 61.8, then it's going to go up. But you see that how it's respecting that 61.8. So when you're trading this, you let the market go down. You mark your Fibonacci from the recent high to the recent low. That happens. Now, when the market bounces off of that, once it bounces off the 61.8 or the 50.0, you know it's going to continue going down. So what you do is you put your sell orders in, like right here. Okay, put your sell orders in right there, or like right here. If the market came and started respecting the 50.0 right here, then you want to put in your sell orders to hit this. So when it drops down, you guys will be in the money. And also, I usually just do the 61.8 just because if it does break the 61.8, then it's going to continue to go up. Okay, so I hope that you guys kind of understood that, because if I go into how everybody else trades this, it's freaking difficult and confusing. And I like to trade pretty lazy because I'm freaking lazy, so it's just how I trade. Alright, let me check the comments real quick. Alright, are you guys you guys understanding this stuff? Because this is for you guys. So if you guys are understanding this stuff, then let me know. I'm gonna go in the comments real quick. Don't be shy. If you guys have any questions, let me know, because this is all for you guys. Because I already know how to trade, so if you guys don't understand something, just let me know, and we'll get that taken care of. Alright, no comments yet? Alright, so we'll keep going. Alright, so that's Fibonacci. You guys understand that? If you guys don't, just let me know in the comments. And yeah, so anyway, let's get going. I'm gonna show you guys the good stuff. Okay, so that's just kind of like I showed you some of the basic stuff. I went into a little bit more detail on how like advanced traders kind of do things with the trends and stuff. But this is really gonna help you guys. I mean, once you guys understand how to use all these things, then you guys are gonna be really good traders. Okay. Fibonacci. Remember, you only use the Fibonacci on trends that on the market where it's kind of already trending. Okay. So that's how you do that. All right. So let's get into some of the cheating stuff. Okay. All right. So what you want to do is you want to. This is all going to be recorded, so I'm just going to say this stuff. So when you guys replay this video, you know what to do. So you go to insert. You want to get some EMAs put up, so estimating moving orders put up for you guys. Let's see. All right. So you want to go to indicator, insert indicator, and you want to go to the trend and moving average. Okay. The first one you want to put in is going to be 36. All right. I'll make this. I'll make this blue. Okay. And then it's kind of thick. You want to leave it exponential. Okay. Boom. All right. Then you want to go ahead and do that again. Moving average. I want to put in 20. I'll make this red. Boom. Alright, and then do that one more time. Well, I guess 2 more times. And, oh shoot, moving average. Okay. And you want to put in, we'll put in like 12, okay? And I'll make that yellow. Alright, and then one more time. Sorry guys. You can also over here. We have alright, 14. Alright, the last one's gonna be 14, okay? You wanna make this I mean you can make this any color you want, but I like to put it green. Just so I can see it. And then let me see. Okay. So you want to go on your levels, make it green, and you want to do dotted lines like that. Okay. Oh, okay. These dotted lines right there. Okay. Oh shoot. Oh, I'm missing something. Sorry about that, guys. Why is this not moving? Hold on, guys. I'm just trying to figure out why this one's not. Hold on 1 second, guys. Alright. Never mind. That doesn't matter. So, alright. So we'll go over this. So what these are, they're just moving averages, like EMAs. They're called EMAs for estimated moving averages, and this is just a cheating way. When I first started trading, these really helped me, just knowing where the trend is and how strong the trend is. And so you see, all right, you see this red line and the blue line right here. I guess like all these little lines. So the green, yellow, and red line. Once those cross over the blue line right here, that's when you buy or sell. Okay, so it's kind of like cheating. So right here, when you see the market cross over the blue line, so the market was on an uptrend right here for a little bit, and then it crossed over this blue line, and that's where you would take your sell right there. Okay, so right here, boom. So you would sell the market right here. And so how you use this is you would sell the market all the way until the market crossed, until all these lines crossed over the blue line again, okay? And then that's when you would take out. So let's say that you got in right here or just somewhere around there. You see how separated they are? And when they're separated like this, that means there's a strong trend. So this is a strong downtrend. And you would take your sell right when it crossed right there. Take this all the way. I mean, you can take out right here. If you're an experienced trader, you would know to take out down here. But if you just wait until all these lines cross the blue line, you take out right there. That's 429 pips. So if you're trading a full lot, that's $4,290. Okay, and so then like that's pretty easy. So you wouldn't trade this. This would be consolidation. You see how the lines are just all mingled together. But boom, see they crossed up. And they were kind of separated. That's an uptrend. So now you know you have a strong trend right there. Like I said, if you were to trade that, all you do is just highlight that, and I highlight that too. All right, so all you do is just put in your buy or sell stop. on the bottom. Boom. Those two, you can either do it that way, or and so once you see that these lines cross up, cross up from the blue line, then you guys could put in a trade right here, and you guys could trade this all the way until it crosses over again. If you're more experienced, you know what's going on. You see, like I said, this rocket ship right there, how it's going down. You could have took out anywhere from up here to over here. But if you're just going off of the EMAs, the estimated moving averages, then you just take out right here. So that's 55 pips. So that'll still be like 550 bucks. But I mean, if you know what you're doing, then 432 pips would be a lot better. So I'm pretty sure anybody would take off there, because if you're trading one lot, that's $4 grand. Even if you were trading at like $2 or $3, just times that by 2 or 3, that's still pretty good. Like if you're trading, sorry guys, if you're trading $2, that'll be about like almost 800 or 900 bucks right there. So that's just how you do that. But yeah, so this is pretty simple, pretty easy to do just with this. Okay, I'm gonna take these off, so you guys get how to do that, right? I'm gonna check the comments real quick and show you guys one more strategy that I use, and then we'll call it good. And then we're gonna put this group together, so when you guys start trading, you guys could ask us for help, and if you guys don't understand something, we'll all just be there together to help each other out. But, all right, no questions. All right, I'm gonna show you guys one last strategy that I use, and then you guys can ask any questions if you guys do have any. But if you haven't got the videos yet, everyone in this webinar is going to get the training videos, and you guys are going to be able to work with us just within, I guess, you guys are going to have a couple weeks to kind of just do everything by yourselves. But then the group, I guess this group that we already have you guys in, we're going to make sure that you guys can do this on your own, okay? Because we really want you guys to be successful and start making some good money. And you guys can do this on the side. I mean, once you guys understand how to put these orders in right here, you guys can put the orders in and just go to work or do whatever. And that's what I was doing. I just put in my orders and just kind of go throughout my day, because we want to get you guys to where you don't have to watch the market, and that's why I just showed you guys this little thing right here with the EMAs, because if you were to put in an order, or if you guys were to just put in like a buy over here, you guys could put in take profits. Oh, that's the other thing. So all right, so let me just show you guys this real quick, because it's going to be pretty important, especially for you guys just starting. So I'm going to just do this real fast. So let's say that right here, you want to get in the market right here. Okay, or once we're at cross, you probably get in a little bit late, so let's just say right there. So the side number that I'm looking at is on the side. So that's about 1.09145. I'm going to do a pending order. I'm going to put it in a buy stop, because you know that the market's going to go up. And so 1.09. Shoot. Tell you guys I'm kind of slow. But, all right. 145. Okay, right there. Okay. So, and then let's say that since you have a set of rolls you want to take out at a couple pips, whatever your rolls are. Mine, like I said, is at least 30 to 50 or 20 to 50 pips a day. 20 to 50 pips a day can make a lot of money. So let's just say, so 50 pips right there. There's about 50 pips. So I take out at 1.09726. That would be my take profit. Okay, 10927, or sorry, 109,726. Okay. Okay, and then if you guys are worried about leaving in your order, because you guys don't want to go negative, or you guys don't want to lose money, what you do is you want to put in a stop loss, so the market doesn't just milk your account balance. If it does go the wrong way, you want to at least put your stop loss at least 20 to 40 pips below. Okay, you always want your take profit to be more than your stop loss. So since my take profit is 50 pips, I want my stop loss to be at least 20 to 40 pips instead of like 50 pips below. Okay, so my take profit is always going to be more than my stop loss. So if my take profit was 20 pips, my stop loss would be 10 pips. Does that make sense? So I want my stop loss to be, oh shoot. When you do your stop loss, you want to go off of the recent low candle and go back like at least 20 to 40 pips. Remember, it has to be less than your take profit. So that's 40 pips, and that's at 1.07679. So I put that in right here. 1.07679. Oh shoot. There we go. Okay, and then all I do is just click an order. Let's see. I think I put in the stop loss wrong. I'll put in this new one. 7880. Alright, I think the reason why it's not letting me put in is because of the market probably is already down there. So let me see. Okay, yeah, so the market's not even down there, so that's why. So I'd have to put my order up here or my order down here. And so that's why it's not letting me put in. But anyway, that's what you would do to make sure that you have a stop loss in and take profit. So your take profit is normally going to hit once you have this in place. So since these green lines are showing you that it's a strong buy, or they already crossed up above this blue line right here, having a set, I guess, just like being disciplined and having a system or a strategy, which is what I use, is just take out at least 20 to 50 pips a day. You guys are always going to make money. And so just doing that, like if you want to let your winners ride, like the more experience you get and you want to just let the market go, like once you can see the market's going to trend for a long time, especially like if you're on the daily chart or the 4-hour, and you see the market's going to keep going up, then you can just let your profits sit there and continue to ride. But if you just want to be safe and conservative, just take out at least anywhere between 20 to 50 pips a day, and you'll be fine. And let's say that you guys are just starting out, and you guys do put in an order that's not good, and it goes the opposite way. Like I said, make sure that your take profit is more than your sell stop. So, or sorry, not your sell stop, but your stop loss. That way, your reward's higher than what you're risking. Okay. So usually when you're trading, like if you're trading just like $1, let's say you put in $100. Okay. The most I'd risk with $100 would probably be like $20. So if you're just trading $1 and I see that I'm negative $20, I take out. Okay. So if you guys want to know, I guess what what pips I use, and I mean the numbers I take out at, we'll go over that in the group. What I mean by that is, like, let's say that I'm trading like $200. I'm trading with like 0.02, so that's $2. I would take out, like, if I'm negative $40, then I'd take out stuff like that. So anyway, well, you guys won't have to worry about that, because once you guys get this stuff done, then you'll be fine. And like I said, I normally don't use trade with stop loss anymore. I just leave my orders in, and I'll take out here and there, just wherever I feel good. And most of trading is psychology. It's just like a mind game, or like it's all strategy. It's like playing chess or something. But I mean, if I could do this stuff, you guys should do it because I'm pretty slow. And I just picked all this stuff up from learning from other traders. I had a mentor, and the mentor I had, his name is Jerome Cox. Super expensive. I'm pretty much teaching you guys what he taught me, but I'm giving you guys like videos and stuff. For him, it's $1,500 for 3 hours. So I just don't think, I don't think that, $1,500 for 3 hours. That's a little too much. I understand a lot of people, like rich people, have that kind of money, but for everyone that's trying to make it, I feel like a one-time payment is good enough. Just help everybody out. So, all right, let me show you guys. Show you my last strategy. It's almost 7:30, so I'll show you guys this last strategy, and it's one that I really like to use. So let me go ahead and take all this crap off real quick. Okay, cool. Zoom out a little bit. All right, I'm gonna go on the 4 hour. Okay, so this works on any hour, like you go 4 hour or 1 hour. But like I said, the higher time frame, the more money you get in the markets. So, all right, this is the last strategy I'm gonna show you guys. Okay, it's kind of like consolidation. How I was showing you guys how to trade consolidation, but just with one candlestick. So what I'm looking for, I'll look for a candlestick that's at least 40 to 50 pips. Whether it's a supply drop is just a red candlestick dropping, so that's a supply drop, or if it were to or if there's a green candlestick that's at least 40 50 pips in a rally. So a rally means that the candlesticks are going up. Okay, so this is like a big huge rally right here. This is a big huge rally, and then this would be like a big huge supply drop. So I'm just looking for candlesticks that I usually look for supply drops, because the market always, like whenever it's a downtrend, it's going to be in a downtrend longer, or it's going to drop faster than an uptrend, because people trade emotionally. So whenever, like even like experienced traders, they trade emotionally, and like you see this big huge uptrend. If you were to look at a daily chart, you'll see that the market actually drops faster than it going up. So that's why I like to trade supply drops. Okay, so I'm gonna look at this count right here because it looks pretty good. So this is about 40 pips. Oh, that's perfect. All right. So what I'll do is I'll go and highlight this candlestick, and this is gonna be my zone. Okay, it's called price lock zone. So that's the strategy. It's called price lock zone. So I'll highlight it all the way over. Okay, from just this candlestick. And the reason why I'm highlighting this candlestick is because I know that since this was a big supply drop, whenever the market goes inside this supply zone, it's either going to move out, going up really fast, or it's going to move down really fast. Okay, and so what I'll do is just like trading consolidation, but it's just one candlestick and it can go on forever. Okay, so what I'll do is I'll put in a buy order, and put that up top, and I'll put a sell order and put that 20 pips below the blue line. Okay, and just to see if that's 20 pips. That is not 20 pips, so 20 pips would probably be down more. Okay, 20 pips would be down more. So if you want to be more aggressive and try to make the market, I mean, you can put your order pretty close to the blue line from this candlestick. But to be safe, just how I'm teaching you guys, you want to do at least 20 to 40 pips below. Okay. And the reason I always do 20 to 40 pips below is because once the market goes down that much, it's usually going to continue that way. All right. So this is about 20 pips below. This top one is not. So let me see if I can delete that quick. All right, so that's probably about 20 pips, 30 pips, somewhere around there. Okay. All right, so now the market, see how this market is in our supply zone? You don't trade that, okay? So right now, it's looking like it's going to come down. And once it does come down, it's going to make a big move like this. You see this? So that's what I'm looking for. So when my order is right here, I can pretty much go do whatever I want. I don't have to look at my screen. But once this, once price comes down and hits my order, it's almost guaranteed that it's going to continue to go down. Okay. And once it does hit my order, this blue line, so the very bottom of this blue line, that's going to be my sell stop. Okay. Because if it does come back into our order or come back into our supply zone, then we're going to hurry and take out. Okay. Because we don't ever trade inside this. So this is called the supply zone, or I mean the price lock strategy. All right. So if this were to drop, hit our order and come back in, this would be our stop loss. So we would take it out. Okay, we'd be negative a little bit, but that's just how you trade this. Normally, once this comes out of our supply drop right here, it's going to drop a lot. Okay, so look at all this. I mean, just these, we could trade those. I mean, we could trade this, we could trade that right there. And remember, once you use this, you're also using everything else we applied. So I mean, you'd have your support and resistance lines on this as well. And so let's say that market came down, boom, you were taken out right here because you see the rocket ship. Like, oh shoot, the market's going to go back up, comes back up into our supply zone, our supply stock area, and it starts to go down, hits our order again, hits the support area. You see the rocket ship, you know that the market's going to go back up. So now it's in our supply zone again, and we would sell that. So I mean, this is live. So I mean, if I were to sell this live, and like if any of you guys are trading live Euro USD, you guys can go ahead and sell that. Well, just don't do it like that. But what I mean is put in an order, right there, so you guys can look that market and get some money off of that. Okay. But yeah, that's the last strategy I was going to show you guys. And we can go. Let's look for. Let's do that again, just so you guys know where to do that. I'm gonna look for another one. Actually, use this. Let's go back a little bit. We can do this one. This looks pretty good too. All you do is just measure. All right, that's about 60. So we want to look for 40 to 50 pips. This is about 60, so I think that'll be all right. Let's do that. And again, all you do is put your buy stop, at least 24 pips up there. Sell stop, 24 pips below, just depending on how aggressive you want to be. And yeah, so that's all you do. You just wait for. Look at this. See, I mean, it broke out a little bit, but you'd be able to make money off of all this. Look at this big drop right here. Came back in. You don't ever trade once in here. Broke up, hit our buy order, and you make some money. And anyway, this is just how you use this strategy. Okay. So there's about 3 different strategies I showed you guys. The best strategy is just going off of the bounces. Like if you find the trend lines, showing you guys with the values. The one reason why I showed you guys that first because I really want you guys to learn how to do that. Just trading these values. Let's do this. Oh shoot. This is just random. I'm just randomly doing this, but this is what I want you guys to learn how to do. Is just trade off of those. That's what we're trying to get you guys at. But just using these other methods, these other ways, just kind of like a cheat in a way. But yeah, so that's about it. Look at that. This is about to drop. Like I was showing you guys. And the nice thing about this, like you can use everything that we showed you guys, or I just showed you guys right here. See these values? Boom, valley. valley, about to make another valley. This is respecting this resistance trend line right here. Okay, so that's the reason I showed you guys that in the beginning, because that's what you guys want to start doing. But everything else is just to kind of clarify that the market's moving the way you mark up your chart. So that is about it, guys. This is all going to be recorded for you guys, and if you guys have other questions, then let me know. Let's see. Yeah, so all right, just to answer Layla's question, so there is a lot limit that you can trade. So if you're trading $100, just depending on your leverage. So when you first sign up, it'll ask you what your leverage is, and you want your leverage to be 1.1, like 1.1 thousand. If you guys already went through that, it should be on the video that I sent out to you guys. But let's say that you have $100. If you have $100 in your account, I think the most you could trade is half of a lot. So half of a lot. If you have $200 in your account, you could trade a full lot. Okay. So $200 and up, really. So if you have $200 in your account, you can start trading a full lot. And I've seen people, even myself, trading with one full lot just off of like $200. You make $1,000 within a day. I mean, I wouldn't recommend that. That's just risking your account. Then you can do stuff like that, like off of $5. Like Trader's Way allows you to start trading with $10. I did a challenge where I lost a little bit of my money and started off with just $5, and I made $100 in like 3 days. I think it was 3-4 days off of $5. So yeah, and then I have a few of my private students that I'm teaching right now that start off with $100, and this girl that I'm teaching right now, she's one of my private students. She started off with $100 and she's made $1,000 right now. I'll show you guys screenshots if you guys want me to, but she's barely hit her $1,000. I think it took her about 5 days for her to hit $1,000 off of $100. So yeah, I mean, it's possible, and I'm just trying to show you guys how I trade. If you guys want to be more aggressive and kind of take a chance doing different things, you guys could do that. But this is how you need to trade to become profitable. Because if you don't do these things, then you're not going to be profitable and you'll lose money. And that's not what we want. We want you guys to make money. So every day, you guys need to remember, I take profit at least 20 to 50 pips a day is my mark, and I'll take profit at least 20 to 50 pips a day. So just one lot. $200 to $500 a day. I mean, that's pretty good. So that's just what I take out at. If you guys know what you're doing, then you guys can take out, or you guys can leave your orders in and let it ride. I also do that just when I see a really good trend. Like on the daily, what I'll do is I'll check the daily chart. If I see a pretty good trend, and I'll just zoom out for this. So right now, the market's wanting to go up because it's been. This is the lowest it's been for a long time. And if you check the weekly, I barely go on the weekly, but if you check the weekly chart, you see that this is the lowest that this currency's been for a long time, and the market wants to jump up, so it's making those little rocket ships that I'll show you guys. See, like right here, but this is the lowest it's been for a long time, and it's wanting to go up. So. I barely check the weekly just because the day's good enough to make good money. Day, 4 hour, and the 1 hour. Let's see. All right. Any more questions? And Layla, did that answer your question? Let me know if that answered your question, because sometimes I explain stuff weird. But, but also, if you're trying to trade like big lots, and you just want to gamble with your money a little bit, that's what some people do. Like some people, they'll gamble in the markets just to see if they can make anything. See, look at that. We're already positive $39. and I put that in just not too long ago. So anyway, yeah, I was just trying to see where we took that. But yeah, so yeah, we're positive 39 bucks or 34 bucks, guys. And let's see. Oh yeah, it's off of that trade right here. You just getting tired of scrolling back and forth on that. Alright, cool. Alright, you see that? The market's dropping. I have our little supply zone area like I was talking about. Boom. Boom. Or use the trend lines. Or use I have these pre-made. All this crap, you guys don't need to worry about any of this stuff. I don't use any of this. I had these saved when I was first starting off trading, so you guys don't need to know any of this. This is called the Hikinachi candles. It's only white and red. We can go over this later. This is a pretty good way to trade as well. It's just a little cleaner. The white candles, so you can find that everything's going up, red going down. But right now, you see how these are spaced right here. The blue one hasn't crossed up on the orange line, so this is just like the EMAs, but it hasn't crossed up yet. So if the blue line did cross this orange line right here, it would be an uptrend. But right now they're gapped, so it's going to continue to go down. I was just trying to find I have a whole bunch of different templates on here that I use. So, let's see. I'm trying to find the EMA that I use. Shoot. Alright, and I can teach you guys this. This is a pretty good one as well. It's called a stochastic oscillator. So whenever price is above this 80, see right here, this line, this white dotted line, whenever the price goes above that, that's when we sell. Whenever the price or whenever the market goes below, it's oversold, so we want to buy it. Okay, so dang it, that didn't go. So right here, this would be this green candle right there. See that? And so you would buy the market and see it's going up. Now it's overbought, so now we need to sell the market. So, like I said, these indicators you don't need them to trade. Okay, a lot of people have these things, but you don't need them. This makes you up because all indicators are mathematical. I forget what they call it, but all it is, it's past stuff. Like it's data that's already been recorded, so you're trading from the past, and we don't want to trade like that. We want to trade in the present. So so everything's accurate. So even though like this is indicating to me that the market is going to go down, sometimes this isn't guaranteed. So that's why I don't really like to use this. So I just use the naked chart. I was just trying to find. I thought I had the EMAs on there, but I don't. So anyway, let me see if you guys have any questions. If you guys want to learn that stuff, I mean, I can teach you guys how to do that, but I just don't trade like that anymore. All right, so that's about it, guys. Is there anything else? Any other questions? You guys are going to get this stuff. You guys are going to get the webinar. But before I leave, if you guys have any other questions, let me know so I can answer them. But we're going to be working with you guys, so that's what you guys are going to be getting. Is you're going to be getting our help, and we're just going to make sure you guys know this stuff and start trading on your own. Because I mean, even if you guys are working another job, this is really going to help. I mean, I don't know if any of you guys know my sister, but I just barely got my sister on. She's trading, and she has a job right now, but she's making at least $300 to $400 a day. And she started off with $100, so she's one of my private students. But yeah, so it's possible. I mean, you guys can have income, on the side doing this stuff. And if she could do this, you guys could do this. If I could do this, you guys could do this. Because Really, I'm not that bright. I know some of the stuff might seem hard, and the only reason is because I have more experience. So this is really how I trade, and the only difference now between me and you guys is I have more experience, and you guys are just starting. So now, once you guys get started, and you guys start getting familiar with everything, this is just going to be easy for you guys to see the trend. That's really what you want to look for. Whenever you look at a market, you want to try to find the trend, put in your support and resistance lines on your chart. Um, just to see whether it's going to go up or down. You can use the Fibonacci as well to see if the trend is going to continue to go up or down. Or you can use the EMAs that I showed you guys, the estimated moving averages, to see how strong the trend is, or if it's going to continue to go up or down. Or you could just wait on the trend to either cross over the blue line to go to sell the market or to buy the market. And then you guys can use the price lock zone, the one where I showed you guys with the supply drop. Or you guys can use a rally, which is the green, and you can just mark your chart up like that. Okay, so anyway, those are just strategies that I use, guys, and they work they work super good. The main thing I'm trying to get you guys at is just using these trend lines. Okay, that's really all I use is these trend lines just to find out where the market's going. Once you guys start getting familiar with seeing the valleys, like I said, two or more valleys, signal like where the market's going, but two valleys. That's all you're really looking for is the two valleys to signal where the market's going to go. So these two valleys right here made a higher low, lower high. You see that? You want to understand the lower highs, the lower lows, higher highs, and higher lows. Once you guys understand all that stuff, then you guys will be golden, and everything's going to be easy for you guys. So I know there's a lot of stuff to take in right now, but the more you guys understand how to do this stuff, you guys are going to make really good money. So yeah, that's about it. So any other questions? All right, so I think that's about it because no one's throwing out questions. But yeah, I'll have this out for you guys. I'm gonna give the link to Taylor after, just because I have to have this upload on YouTube, and then yeah, you guys get this. So hopefully that helped you guys out a little bit. Hope you guys learned a little bit more than what you guys came in here searching for. So yeah, all right, guys. So peace out, and we'll get you guys in the group, and we'll answer any questions you guys have. And just steady, okay? Steady up. All right, peace out, guys.